What is going on, everybody? Welcome on into today's live stream. We are looking right now at ticker symbol AI, one of the, hottest AI stocks, if you will, that's been making big waves in the markets the past couple of months. I just happened to stumble across this because I knew it was down a ton yesterday, and I jump over to check it out today, and it's down an additional 17%. My God. This looks bad. I mean, bad is a relative term, but I mean, obviously, if you bought in up on this extension to those highs, yeah, it hurts if you bought over $30, because it's down around 20 right now. We'll cover the head and shoulders setup in a second across the overall market. We kind of hinted at it yesterday. We want to talk about that, some not theories, but some paths, I guess, going forward to be paying, if this, then this is a more likely type of deals. I'm going to cover some of that, but I was just checking this out. We're looking at the 1 hour chart on it, and it's pretty clear that we're right down into support. So you want to short it, be my guest. It's already made a huge move from like 35 all the way to $20 in like 2 days, so be my guest. One would think it bounces here. I never bought this stock. I just watched it the past couple months. Actually, I think I may have shorted it at one point, and I made a few bucks on it back a while ago, but not much before the earnings report. But that was back in early March, late Feb. But yeah, I mean, you would think if this was to bounce, up into the lower 20s again, and then roll back over and put in like a lower high somewhere up in here, ideally, below $25, then the breakdown here, I think, is very likely, and then that's a easier breakdown trade if you want to trade the breakdown, The problem is, hey, like if you're looking at this for a short idea, like it has been down a ton. The concern would be into a spot that has been an area of support that we get a bounce, to some degree. But we'll see. Either way, you go to the daily chart on this thing, it's a pretty clear level around $20. If $20 goes on AI, next spot I would watch was this kind of like double top around 18. And we'll see what happens from there. But I think it could be a clean move to 18 or something like that on it. But yeah, I even remember I saw some people talking. It was, obviously getting a lot of hype when it was rallying and, making the big move. But people kind of jerking it off a little bit, on social media, showing some gains, posting some charts, talking about this is the, going to be the best trade of the year or whatever. It's got a lot more room to run. It very well may. I'm not sitting here bashing the thing, but it's funny. It's just another example that I think like how important using sentiment and stuff like that is, because people get a little overexcited, a little greedy on these things and just in general. And, then we see the market tend to pull back or a stock pull back and whatnot. And the same thing on the flip side. And this year has been a good example. The past year has been a good example of that. If you bought some of these stocks in general, when nobody want to touch these things, you did pretty well across the board. So I hope you guys are doing good. What's going on? Flip us in the house. AI shady accounting or something. Yeah, I mean, I'm more so looking at this chart and thinking to myself like, hey, this right here, sketch, because it's like a lot of pressure on that level. Maybe it's worth a shot on the short side in my view, honestly, even like could be like an account hedge, in my like Robinhood account. I'm not going to short this with anything size wise because stock, who knows what can happen, right? But if this level breaks down, it could be worth something to get a move into here. I'm only skeptical right now is that it's a huge move down. You'd expect a bounce day, and that bounce day could be a 20% bounce. You know what I mean? For all we know. So something to keep in mind, though. I'll be watching it because caught the attention yesterday and kept it on the radar. But here is SPY, the S&P 500 ETF, and the head and shoulders concern, right, is this. So here we go. We got this level right here. Jeez. Why is the chart messing with me today? There's your left shoulder. Here is your head. And here is your right shoulder that is potentially forming. Now, of course, there's no guarantees that this is officially a right shoulder, right? We don't know because it's just potentially going to build a higher low here and then go higher. But we have that set up. And it is pretty darn close and lines up pretty darn close within, a few points of the highs that we saw on the left shoulder, which is why I would say that's something to watch. Again, people are going to talk about this and go, yep, it's over. The market's done. It's here comes the dump. I mean, you can't say that in my opinion, really. Obviously, if we start to break down here, that would be pretty important, right? Of a spot around 410, 412, technically the highs of this recent rally into late March, early April on SPY. But you got to break down below 380. 380 goes, and then, right, I think it's pretty obvious where the market wants to go. That's kind of the deal. So that's what I'm watching for now. And on the big picture, more macro or week-to-week scale, not necessarily day-to-day, but that's the head and shoulders pattern that we've been watching or that is now forming. So today's action, though, let's look at today. 5-minute chart, kind of, I don't want to say wonky, but we broke below yesterday's lows. That provided a nice move down to about 406 from 407. Really not a huge move, right? About $1 move. And you bounced back up, came back up to about 407.25, 407.30, retested the breakdown spot, found that to be resistance, came back down, made a new low of the day, barely undercut the lows, and then bounced right back up. And now we're kind of in between, right? In the middle, just kind of, not a huge fan, right? If I go to VWAP, I got to edit my VWAP is all messed up. Give me a second to edit this guy. I don't use upper bands. I don't use any of these things. I just use the VWAP, and I have a thick white line as my VWAP. That's it. And I only like to put on like the 5-minute chart, to be honest, because if I'm looking at other larger time frames, like I'm more so looking at patterns and higher lows and double tops, double bottoms, things like that, and trends versus, the VWAP, right? But yeah, it kind of crossed above it early, below, a bunch of crosses now above it. So it's like kind of choppy action today. Not surprised. And tomorrow will be the last day of the week because markets close on Friday. So we'll see if we get any action there. But the trend since, I guess, Tuesday morning is down right now on the overall S&P. But you broaden it out to the 1-hour chart and you say to yourself, what do we got here in the 1-hour chart? Well, trend's pretty darn nice to the upside, really, since mid-March, right? So it's just been, zoom in the time frame, and yes, you've got the downtrend. Zoom out the time frame, you got an uptrend, so you got a kind of conflicting looks there. And like we talked about yesterday, I think the biggest reason why that's important is because when you get, like when we're looking for downside, I think today's the perfect example. Like this move right here, that we broke these lows. I played it small on futures and took a small loss, but a stop loss above like 406.50 or so on SPY. But the setup was kind of there for this breakdown to occur. And we kind of got it. You got a little push down, a couple wicks, but you just couldn't do it. And then eventually you bounce back up. The danger is that when you're playing these breakdowns or breakouts that are against a bigger picture trend, like, yes, we have a general downtrend since like yesterday in the market. Sure. So like you're playing with a trend, but you zoom out, right? Unless you're catching like the first move of the day, if it's the second or third, after consolidation move, chances of that are a little less likely because you are in an overall uptrend. Of course, if that is breaking down, then it'll go your way. But if it's not breaking down, and there's no way to know, only, you can only know after as it's pretty clear, days or weeks later, that was the start of a new downtrend or a break-in trend. It's tough because you're kind of playing against the bigger picture trend. So something I always kind of think about, or I've been thinking about more these days, and to kind of give you a better framework before you take a position, something like that. A lot of recession fears today. Cutting hours, Donald McDonald's, big tech all firing. Yeah, it is concerning, right? It definitely is. And again, like we've been saying, let's check some of the next data releases out and what we've been getting here. It's like it's a ticking time bomb for. I'm not saying ticking time. It's essentially set up so that we're going to have inflation pressures essentially, to the upside that are be very, very minimal over the coming months. I just can't imagine, especially with the job situations, and it takes time to play out, right? So in my view, it's the slower it has been, or the tougher it's been to get inflation down, only makes it that much more, important for what's going to happen in the future, because the lag behind that could be completely wrong, but ADP employment numbers. Geez, that seems pretty freaking low. What's up with this? U.S. private sector private sector pulling back, adding only 145,000 jobs in March. That's pretty insane, right? Am I missing something here? Because I remember I saw people talking about this morning. I didn't really check it out till today. But if they projected 261,000 jobs here and they come in with 145, like there's something off, right? Or there's some, how are you that off? Jeez. Or this is the prior month? No, it was a forecast. The prior month, the previous number here was 242. The forecast was 261. So I don't know if this 261 was. Don't think that was accurate, unless that's just maybe I'm wrong. Yeah, they forecasted to gain 210,000 private sector jobs. They added a revised 261 in January. Huh. Pay growth decelerated for both job stayers and job changers. That's interesting. Yeah. Big picture. Job market's been strong with jobless claims turning below 200K. Companies seem wary of letting workers go. Our March payroll data is one of the several signs that the economy is slowing, and Nella Richardson, chief economist, says employers are pulling back from a year of strong hiring and pay growth after a 3-month plateau is inching down. Yeah. So, I mean, that's not a great... I mean, it's not the end of the world, right? But it's not a great number, you would think, right? Jeez. Something's going on. Labor market seems like a big slowdown kind of building. Yeah, it's just taking its sweet time. Just taking its sweet time. ISM services comes in lower. S&P, final U.S. services, PMI comes in lower here. Trade balance a little bit lower than expected. I mean, the numbers are not great. And I'm not like, again, you know, we'll get this like tomorrow. I guess the good news, or not the good news, but tomorrow's news will be the jobless claims. So jobless claims that we're going to get tomorrow. And I guess technically we get Friday. Oh, that's cool. We kind of get Friday. We do get info on Friday, even though the market's closed. I wonder if futures are open. That'd be interesting. But yeah, so technically we'll get some stuff on Thursday and Friday morning at 8:30 a.m. So that's the next thing to watch. Tomorrow, Bullard speaks at 10 a.m. Keep an eye out for that. That's going to be, you know, you would think it's market moving. Yeah, it's kind of interesting. So we'll see what this number comes in at on, well, tomorrow. And jobless claims, in this case, you know, the more, the worse, technically, for the economy that it would be, right? So you want this number lower if you want things to be going good. You want this number higher if you want things to be going bad. Essentially, that's what it means. You know when you get like these weird voicemails, or like you get like a million of these things? Like I get like a million spam calls. No one leaves a voicemail. This one did. But it's empty. That's good. Jeez, man. Okay. SPY back at 407 right now. It's taking its sweet time. Here's my, like, I was thinking of this today too. If we got, like, I was, because, you know, going through like the thought process of like what's going to happen market wise, like, you know, you look at the charts, look at the news, and it's all gray and dark, and it looks terrible and everything, and you can't imagine the US dollar news, the oil news, then this, then that. It's like, oh my gosh, nothing is good. Then you start seeing some of the job news. It's just like, oh my God, it's just like, why would I even like have any hope? Right? You can kind of think that way. I feel like it's easy to think that way. But my thought was like this, is like, people like to talk of the melt ups, and there's very few people who believe that, I think. But the people who think that that's going to happen, where we get something like this in a very short span of time, like this year, that then precedes like a bigger crash, right? To kind of sucker in people, you know, bring greed to the next level back in. And and then screw everybody over and have people who buy the dip along this entire way just get blasted from like, you know, a Max Payne scenario. Like think about that. I think if that happened, in my opinion, it wouldn't be, now of course it's gonna be tough. It's tough to say, like, because you don't know when the top will be and whatever. But if that were to happen, I think it would make it so clear to me. It would make it so clear to me that as someone who's, you know, let's say you're older, even myself, who's 20 something years old, there will be opportunity. I've got the rest of my life for major opportunity, let's say from recessions and whatever, and I want to have money when those things happen, because if you don't have money and you get screwed and you kind of are buying the top, and then you've got no money when the market's actually shit to buy, you know, quality stuff and just buy the S&P lower, right, than or a lot lower than where it was. Like you can do some damage in, you know, retirement accounts, IRAs, or just even in portfolios in general. You can do some serious damage in a good way on those situations. So you want to have money, but it would be clear as day to me, is given the current scenario and with what's going on, right, globally in the US, whatever, is if we had something like that, if we had a rip to the upside that would surprise everyone that no one believes is going to happen, and then all of a sudden everyone's buying up here because the US is the best and the market's the best and we're going to 1 million, there's no stopping us, we can go to unlimited PE, you know, whatever. That would be the ultimate signal for me to say I'm done. Like, I'm not done. I'm saying, like, get the fuck out of stocks, hold cash, collect a few bucks or off of interest, and, you know, the short-term trades are fine because those are just trading off of patterns and technicals. But I'll sell everything. I will sell everything. I don't care. I'll just hold cash. You know, maybe a hedge here and there. But even that, it's tough because if we had a full-fledged, you know, ripping rally, blow off top, melt up, whatever you want to call it, like some people are, not many again, but like some say, if you had that, you can't even short that because you don't know when the top is going to be. You get blasted on the short side. So it's not like it's even worth it, in my view, to even try to short that because, again, you're taking a guess as to where the top is. You got to wait. And the thing is, I think that backside will be nasty. It will be amazing for people who play the backside. And so there's no reason to rush. That's kind of how I kind of view it. You know, I know that's like a terrible scenario because that's like the Max Payne scenario. I think that's the Max Payne scenario, is rally in the near term, whatever that means, whether that means go to 4,500, go to new highs, go to 4,300. I don't know what the hell it means, whatever. Rally near term, then eventually just establish backside and give the dip buyers absolutely nothing. Like literally destroy dip buyers, which dip buyers were rewarded this past year. Destroy them maybe in the next year. I don't know when the timing is, but just big picture, destroy them. That would be Max Payne because you just taught people to buy the dip, right? And if I missed buying the dip, damn, you know, I got screwed. They buy the breakout or they buy into the rally, right? Which ends up screwing them because they're buying a top or they're buying close to the top. And then they get destroyed on the backside. We go to new lows or even maybe bigger low. I don't know. That would be the Max Payne scenario. And I think for me, it would be clear as day. Clear as day. S&P gets up in here or higher. Like that, there's a really good reason to hold a lot more cash, even if you end up missing a move to new highs and it's like crazy and everyone's going nuts. Yeah, there'll be short-term trades to play off of that, I think, and there'll be small caps going crazy again. There'll be short squeezes out the ass again. Like, they'll be crazy. Like, that stuff will happen. So there'll be some money to be made there, I think. You know, but from a putting your money in the S&P perspective or just buying large caps and holding long terms, dude, get out of all that expensive stuff. Like, you know, why would you be buying Apple up there? Why are you buying Nvidia up there? I don't know. It would just tell me that it would be the signal for me that there will be better prices to come. Just wait. Just wait. No need to be, and especially for I think people who are going to be like at that retiring stage and who don't want that risk, dude, take the money out, put it somewhere else, get your 5% a year, get your 2% a year off of just, you know, whatever the interest rates that these banks are paying now or your accounts are paying now, and just relax, right? Yeah, okay, inflation, yeah, sure. Well, actually, if we end up having deflation, then maybe you're actually chilling fine, right? I guess rates would come down at that point, but you know, you'll be doing good and you'll be like, okay, when the time comes and when, you know, no one wants to buy, you know, okay, now maybe I can start thinking about nibbling again. We will see. We will see. TJ says Western Alliance Bank spiked up about 2 hours ago on heavy volume. Since then, it started back down a bit, perhaps looking like a bull flag. Let's take a look. Yeah, I mean, if it can hold over this VWAP, right, you'd want to see it holding like 29 bucks. It had this little wick down under here. But if it can hold the VWAP, which would be a nice spot right here, around 29, that looks decent. Not sure why the spike, though. Would you say that instead of mutual funds, ETFs would be a better investment? I personally, it depends on your knowledge and goals and your ability to understand what's going on. To be honest, I don't see what's wrong with a full S&P ETF when and just simply playing off of the fact that, like, when people don't want to buy and the market's crashing, like, okay, I can start nibbling, and it's just, a dollar cost average approach. Yeah, like if we give a crash, yeah, everything's going to get destroyed, right? But the S&P is diversified, whereas the problem with mutual funds, the thing is, I have seen this, it's not a bad thing, but it's a perfect example. Not that it was necessarily in mutual funds, maybe it was partially, but when you have someone more so actively managing, so my mom's mom, my grandma, God bless, she's, still doing great, but she had her money essentially in or being managed, I think by like Wells Fargo or something like that. And they essentially, over like the past couple of years, now, mind you, let's look at the S&P. The S&P, go to the weekly chart on this thing, right? Yes, COVID, yes, fair enough. Like market comes down. I forget exactly when they were managing the money. I don't know if it was before this period or if it was after COVID, but either way, let's say that you happen to take over her money and it was pre-COVID. Okay, let's say they took over. Let's say that they took over at the top, the absolute top pre-COVID, right? I don't think that they did, but let's say that they did. S&P's up 20% since then. They essentially returned nothing, like extremely minimal. Plus, they're taking fees. They're taking a decent cut out of your portfolio, right? That's paying themselves to manage it. And I'm sitting there like, hey, my dad was talking about it. He's like, he was like, because she has no idea, right? She has no clue. She just, her money's there, wants to be safe and protected. It's like, at that point, I would have just if I put my money in the S&P, I'd be up 20%, probably more, with dividends and reinvesting. And also, don't think that they would have I don't think they took over at the exact peak, but I'm just giving like an example. So it's like, the problem when you put other people in charge, like at the end of the day, no one knows what they're doing. So is it better than you? If you can sit back and say, hey, somebody else will do a better job than me because I'm an idiot, then fine. You know what I mean? Then maybe that's an idea. But when it comes down to it, I think the ETF side of things, like, hey, if I'm going to invest, it's not that difficult to understand, like from a dollar cost average, from like a long-term investing approach, how the S&P kind of works. And if you even just this past year, yes, let's just say that the bears are right in the next couple of years and we do go down, and we go down so much lower, right, on the S&P. Okay, cool. But at the same thing, if you were just someone who was kind of buying into these fear or these max fears, like your average right now would be, let's just say like your dollar cost, like you'd be somewhere in here. You're not going to have an average up here. Like that's a substantial difference. And then you, of course, would be buying into that dip, into here, over time and whatever, right? Who knows? I prefer that. I'd rather than someone actively managing. There are actively managed funds and whatever, and ETFs or ETNs and whatever, but I prefer just a simple ETF. You know exactly what you're getting into. They're not going to change it, or there's minimal change that's occurring inside of the ETF on a month-to-month or year-to-year basis. So you don't have to worry too much. Don't mind the bear market if you profit from puts. Transfer to long terms. In the perfect world, that's literally what you would do. Right? In a perfect world, you take any profits off of like trading on the put side and you just transfer those into the S&P, or long-term S&P, position or whatever stocks you want to hold long term. Time for some SQQQ long. Let's take a look at QQQ. Let's pull up the chart, pull up the daily chart and see. Let me get rid of my Webull back here because it's sucking some energy out of my computer. I'm not really using it right now. I'll go over the 2 trades. I did take two trades today, maybe 3. Yeah, I mean, it's still, you don't, who knows? Because the thing is, this is still potentially an uptrend, right? All we've done right now is backtest prior resistance on QQQ. So if this holds, right, we can easily just be going like this. And it's, a pretty standard pullback along an uptrend. So like, I look at the S&P on the bigger time frames, it's still an uptrend. The Qs are still an uptrend. IWM, that's what's not. So this has been a lot weaker. This is what's not an uptrend. I mean, maybe if you, no, it's too choppy. It's just really consolidation right now. You got to get back above, 180 for us to start talking about that thing gaining some stream to the upside. But if you were to hedge, sure, the only problem would be, you start to break out on QQQ back over 321, and now you could be breaking out to new highs of the year, and you're in not trouble, but if you wanted to hedge yourself, then you're wrong, right? In terms of timing this as a top. The only thing I think that this has been stronger than the S&P. The S&P, we have a potential head and shoulders pattern right here, like we mentioned a few minutes ago. Really, if the S&P cannot get back over 412, which we're not that far away, we're like $5 away from 412. It could be hit in a day. But if we can't get back over 412, this is like pretty nice in terms of that head and shoulder setup. Like the highs here just line up really, really nice with the highs back in November, December. And then we got this head here. That's a really nice topping pattern. If it holds, again, we're early on in the development of it. It's only a couple candles in on this right shoulder. If this holds, then yeah, it could be a nice setup back to the downside. Yeah, so, for a hedge, sure. But just know that could be wrong and that could be, invalidated fairly fast. Gold retest the 2000 level and rip. Let's see. I mean, I think that it's a pretty good bet. Well, let's see. Yeah, it wouldn't be a bad spot to pull back to on gold. It wouldn't be. It pulled back to this 1950 or so, and then it bounced from there. So yeah, 2000 would be the next kind of spot. It was the highs of back here in late March. If it pulled back there and held it, that would be a really nice look. But maybe it doesn't even do that. Maybe it just goes to new highs. It's within a couple days. It could at this point in time. It could even happen this week or next week that gold can hit all-time highs. I mean, gold is really within striking distance of this blue line, which would be all-time highs. So that would be impressive on that. Silver, that like $25. Broke the downtrend. Retest of 24.50 would be fine, and then it could break, or even 24 to go higher. But gold and silver are strong. They are really, really strong. So, looking back, I guess, who would have known? There's no way to know what's going to happen. But when I got the silver allocation in the Robinhood portfolio a few months back, I did that at a pretty good time. I did that, let's see. I did it somewhere in here. So it ended up coming back down towards my average, and then it bounced huge off of that the past couple weeks. But so far, it looks like a decent position. My stop loss is now is around $20 on it. Silver back under $20, I'll get out of it. I've been selling covered calls and pretty juicy ones at that the past couple months anyway. So even if it came back to my entry price, I would still net probably a couple $100 off of it because they've been they're pretty good covered call premiums on it's AGQ. AGQ is the silver play that I'm in. So it's working nice. Can't complain. Here's a look at oil's chart. I am a little bit not concerned, but oil, 3 days, it's been up here, hasn't really pushed, hasn't really dropped either. Oil stocks, though, I think have been taking a bit more of a beating. if we look around across the board, here's XLE. Sorry, XLE's up today. Actually, it was lower. Oil stocks, let's go to ExxonMobil. What's up? It's actually ExxonMobil's up 1.35% today. So never mind. Maybe I was, well, this morning things didn't look as good. Exxon, oh, look at this. That looks pretty good. That probably sounded really weird. Yeah. Above 116, really 116.85, 117. Exxon looks juicy. Maybe an all-time high test coming there. But Exxon's been a beast, but MRO, check this out. MRO, not so much. Started to fill some of that gap in. Oxy as well. MRO and Oxy are both down today. Two oil stocks that I am short out to next year, more so as hedges / just downside protection on the portfolio. But yeah, they're back up a little. Well, they're down today and they're down yesterday. So we'll see. ExxonMobil's been the beast. If you're going to go long an oil stock, I would say you'd want to go long Exxon or Oxy, but MRO is weak. MRO, Marathon Oil, this is the weakest one of the bunch from what I have watched over the past couple months. Yeah. 10-year today is at 3.3. It was actually just below. It's holding this level. It's kind of like this downtrending support, which I don't really like that as a support, although because it connects back to this high, it's a notable level. The dollar is up 0.3% today. It's just not doing much, but it's kind of floating on down. Another thing to note too with this whole dollar thing is I have to say it kind of feels like I don't want to say it's overhyped because it's probably not true, but it is kind of just this weird, like, I feel like everyone's kind of seeing this and saying, yeah, the dollar's screwed. Look, the dollar is losing its the US dollar is losing its power and whatever. Here's the dollar since 2015. I mean, yeah, because it was up, well up here, a few months ago. Fair enough that it's come down a lot, but let's talk if the dollar's crashing through the 90s. We can get more scared about the dollar, getting destroyed and losing its value. The dollar's fine in terms of its value right now. Like in terms of just DXY, the dollar index, it's holding up despite everyone freaking out, right? You would have thought the way people are kind of freaking out about the US dollar, you would think that this chart would look like this. It doesn't look that bad. It's actually not even to the lows of this year, believe it or not, which is kind of funny. The VIX is at 1925 or so right now, just kind of chilling. The VIX needs to get over $20 or under 18, and it doesn't look good. It's kind of in that little range. 18 to $20 is the range. Okay, so we're talking about this. Yeah, tomorrow jobless claims will be the key to watch. Trade balance numbers, ISM services. Of course, I reached my free article limit on MarketWatch. Stupid. Articles should be free, right? Anyone else want to get behind that movement? Articles should be free. Put the ads in the articles. Put your affiliate links in the articles. Monetize it that way. Make the articles free. I don't want to pay. I guess maybe companies and stuff, but like I don't think a lot of general, just average Joes are paying for MarketWatch subscriptions. Like, because you can probably find the data of the articles or someone summarizing it somewhere for free anyway. You know what I mean? Like, I don't know. Oh yeah, so I may as well go over today's. I felt pretty good about today. Took two little plays on futures. So here's what I did first. I was looking at the hourly charts this morning, and I saw essentially this blue line right here, this one right here. On this is crude oil futures, and I said, okay, we break below that, I'll go short, and we got the breakdown, and we got a decent pull. I was looking for literally like a couple cents more on the move down. Didn't get it. I was looking for like closer to these lows. Didn't quite get it. Got close, but ended up just being a higher low technically in the trend. And I'm not surprised. I probably could have locked it in fast. It was a small loss. I wasn't like a big loss. I kept it pretty tight. The reason why, again, I played the short side is it kind of playing the contrarian. Yes, it's trending up the past, couple weeks after, especially after the big gap up, but even before that, you're playing a short, even though the setup was there and it was a valid breakdown setup. Yeah, sure. But you're playing a short in an overall uptrend or bigger picture uptrend. Is it the best move? Probably not. Can't expect it to be a huge breakdown, because when we've got, again, we were talking about this yesterday, the breakdown trades are the best in bigger downtrends, because then you've got fear, you've got kind of capitulation to some degree, you've got panic sellers, and the breakdowns are easier to happen. If you're going to short in an overall uptrend, you're going to want to short up into a rejection of a resistance, as your risk. Like, that's kind of the idea, where that's going to be a better risk reward. You know what I mean? So that was that. Then I had futures. I had SPY or S&P futures once we broke down under this level, which was yesterday's low. It was kind of a choppy move down, I believe. Yeah, it was kind of choppy. It wasn't super, super clean, but I played it. We got a decent move. It actually held below VWAP, so that was where I kind of stayed in. And I took profits down into this 41 something area. And that was kind of the deal. I played it again, super small on this breakdown, but didn't provide us much more downside. Why did I like that? Well, we had 2 1-hour lows down around the same spot, broke down below 4,100 or so. Thought we can get a bigger move down. We got a few points, and then it kind of came back and had a stop loss pretty tight on it. Actually, if I can find out where exactly it was, I can see the exact. Yeah, it was this. It was this. So I essentially got in on the breakdown here, and then my stop loss is over this 5-minute high. So it really was about a 5, not even that, it was like a 4-point stop. Wasn't bad on those two. Well, it wasn't bad. So I had 1 win, 2 losses. Those losses were fairly small. So I'm not pissed about that. But then I had Apple, and then I had AMD today as well on the options account, which did end up working nicely, and they made money. So here's AMD, or here's Apple first. Pull up Apple first. It was this level right here. Levels are on the chart still. This low from 10 a.m. I guess that's 10 a.m. Central Time, my time. And then we broke down here, which was at 10:40 a.m. Got a nice move down, never came back up above that line, essentially. So it was a super clean move. I ended up taking profits, like, not all the way at the bottom here, but like along the way. And then I think I got stopped out, or it came back up at my stop, whatever. I forget. Maybe it was one of these candles that I took the rest of it off. Either way, it was a nice move on Apple. Let me just double check if it was AMD or not on the second one. 95% sure it was AMD. Let's go to my trade history. Yeah, AMD 93 puts. Pull up the chart for AMD. Same kind of idea, actually. I think it was on my Webull that I had a better look on it. But yeah, same idea. It was this level right here. Once we broke down below that, we're under VWAP all day or all morning. Trend is down. Pressure. We got the move down here. Entered on this candle breakdown below that level, and we got a pretty nice push down. Just took profits, I think, quickly, and or took half of it off into this area here. Got a bigger push. Took the rest off once we started to come back up and hit my trailing stop loss, essentially. So pretty simple on those. Somewhat sketch because, again, I was kind of playing the downside inside of a bigger uptrend on these names. So not the best. Although I look at AMD's chart and I'm like, well, this thing looks pretty good if it keeps getting, or if the pressure continues. Like, this has some room, maybe back towards $89, something like that. But it kind of worked. It ended up working out, and I can't complain. I came into if I look at it that way, like, I waited for stuff that was was pretty clear to me on higher time frames, whether it was 1-hour charts, whether it was daily charts that had nice setups to see downside. Across the S&P was more so a 5-minute and an hourly chart, I believe, what I was looking at. But it was pretty clean. It was not like super complicated. I wasn't looking at it like, oh my God, I'm not really sure. But I felt like this like impulse kind of feeling to buy or sell. I didn't feel that. So it was just kind of take it easy, take it slow. Sizing was pretty small across the board, but you hit it right, and it doesn't really matter. I played next week contracts, so it wasn't even this Friday. It was next Friday. So I'm not really sitting here worrying about time decay, theta decay, and I'm not shitting my pants about that. So it was pretty straightforward, and I don't want to say simple, don't want to say easy, but it wasn't super complicated. It respected my risk and my plan pretty much perfectly and just locked the gains and took the losses when I had to on the future stuff, and took the gains when the plan told me to, essentially on the options. Caught a 5-minute head and shoulders on SPY. Let's go jump back and check on SPY. Might as well pull that back up. It's coming back up now, but nice. I got back into the swing. Took 5 days off from essentially like working out, running and stuff, but I got back into the swing of things today. Hit a new record on, or at least for this training cycle, of a 3 mile today, but it knocked the shit out of me. Tired, man. The goal is to run the Austin Marathon next year. It's in February, so I got plenty of time, but the training has begun little by little. I've never run really. It was last week I did an hour run, did like 6, 7 miles just straight. I've just never done that before. I've only done short distance sprints and whatever. Played lacrosse, played football throughout, school and whatever. But those are shorter distance runs. Yeah, there's some endurance training, but not too much. They're never making you run 6 miles generally. At least I never had to. But it's a side challenge, a side quest, a side goal for myself. Okay, so here's TLT. Yeah, this looks pretty good. TLT, and it's still got some more room to go, but it looks good. I sold a covered call on TMF today out to April 21st, the $11 strike price. TMF currently trades at $9.41. So I got about $1.50 cushion on TMF out about, I don't know, is that 2 weeks? 2-ish, a little over 2 weeks. I think that should be fine. I have 300 shares of it. So, $11. It's all the way up here. That'd be a pretty big move. And we could get there. Don't get me wrong. It could be a big move. But I think nothing's free money. There's no guarantees. I think it should be a safe cash flow for the next couple of weeks. That'll probably expire worthless. And then I'll be able to sell more going forward. Again, it still require a breakout to the upside here. So it's something to think about. It still will require a breakout. We still got to get big move up. No guarantees just yet on that. But yeah, the parent ETF is TLT. Try a triathlon. I'll do it. I will. I definitely would do it. It'll be a challenge for sure. But maybe like even an Ironman one day would be sick. I'll get there. I'll do the marathon first, and maybe every year we kind of step it up a notch, because it's something I've always enjoyed. Let me get rid of these grid lines. I keep always turning them off, but they always come back. I feel like I keep saving the thing and it never actually saves. Yeah, I should save now. But yeah, I mean, marathon for me would be a pretty big first start, and then who knows? Biking and swimming will be kind of a challenge. That will be a big challenge, I think, for myself. But it would be something to do in the future for sure. Because I've always only just like played sports, and then there's running involved there, but and then lifting weights is like all I've done essentially until now. You kind of have that always like, and I was a pretty skinny kid of like, I'm super skinny and whatever, and I want to get bigger and look, bigger, I guess. But now I'm at the point where like, it doesn't really matter to me. Like, yeah, I'm still lifting and stuff and whatever. Yeah, you want to get stronger. There's goals there, but there's other stuff too. And it's kind of keeps it interesting. And it's kind of cool to do both, right? To do kind of, to get good at like running longer distances, and then also like lift weights at the same time and have a good balance. Nice physique. It's not like you're super skinny where you're like a toothpick running. And those are the people who probably be the best at it. I'm not trying to be the best, right? But it's a good challenge. I was looking at XLP. Consumer staples. This thing hit a new high on the year today. I think, right? Nah, technically, no, not really. No, technically not. But a new high on this breakout. The thing has been going straight up since the break, which is kind of crazy. I sold all of mine on Monday, but because it hit my target. Looking back, I could have held on to some, but all good. Consumer staples. Who would have thought? XLV Healthcare crushing it since early to mid-March. Another monster day for healthcare today. Killer. If you guys are hitting the like, that would be much appreciated on the streams. The goal is for this month to add an additional, just going forward, to add an additional nightly nighttime stream during the week. So maybe it's like Wednesday. I don't know. We'll see. Right now, we generally do when I'm home, which now I'm home, so it doesn't matter. I'll be around Sunday nights before the week begins, or if Monday's market's closed, we'll just do a Monday night, whatever. But I'm thinking about somewhere in like that Tuesday, Wednesday, or Thursday time frame to do like an 8 o'clock or something like that Eastern, or maybe 9 o'clock Eastern time stream. I don't know if that sounds good, but I think it will be fun because we'll probably be able to kind of cover a lot of charts. The market's closed. Like we don't have to worry, it's calmer. We can get more people in there that are, come back, that have time after work or school or whatever, that want to jump on in and toss their ideas at us. So XLP and XLV are safety plays. And that makes sense why they're doing well right now. So you're seeing that little bit of rotation out of tech into some of these guys. Marathon runners over 210 are called Klein's tails. That was me. I mean, I'm not there. I'm 175. I'm 5'10", 175, which is pretty decent in terms of, I think, a pretty lean physique for myself. But I'd imagine deeper I get into training for it, I could probably maintain this weight, but I could also maybe lose a couple pounds, maybe 5 pounds or so. Get down to like 170, below 170 with the amount of muscle on my frame, that starts to get pretty lean. And I don't want to say it's scary lean because you can get much leaner for like bodybuilding competitions and stuff. So don't get me wrong, but it starts to get more challenging, probably more taxing on the body just to do that stuff. So depends, unless I lost muscle, which you may lose some, I guess, if you're into a deep deficit or training super, super hard, you'll lose some muscle for sure. But keep the protein intake up and maintain as much as possible. At the same time, right, it comes down to training gym-wise, and if you know what you're doing there. Tesla's being hit pretty hard, too. Here's Tesla's chart. It still doesn't look that bad. I would say I'd get concerned about it. Breaks down here, under 165. So we'll see. Kind of a small downtrend developing right now since November. It's 3 touches right here. 1, 2, 3. So needs to get above, what is that? 205 right now would be the downtrend line on Tesla. Above that. And we could be looking at a nice move up. I'm looking at this and it reminds me of NVIDIA from a few months back. So I'm just kind of like, until this thing was to break down here, I'm holding out hope. I guess it's a terrible way to look at it, but I'm holding out that like potential idea that this could be a bigger mover again if the market is strong, and this wants to go north. They had their delivery numbers and stuff this past weekend, so that's why you're driving it down right now, and it's been a bit weaker. But I don't know how much or how big of a deal that really is going to be in the grand scheme. So let it play out, but under 165, and then I'd get rid of my Tesla exposure. As it's breaking down. Although from a longer term perspective, I do understand that would probably be the time to start maybe buying. Sure. But I'm going to play it off of that. I'm up huge on it. I'm up like 100% or something like that or maybe a little bit less now from my entry on the Tesla exposure. So I sold a good chunk, sold covered calls. We'll continue to sell covered calls. Let it do its thing. I guess the next big thing is earnings coming up here, which was going to be, when is this going to be? April 19th. So that's coming up. Let's come up. I guess we're gonna start talking about the next earnings cycle, right? Soon. Apple's not out till May, so in the next month we start getting closer, and we're getting towards the next earnings cycle. So we got to start thinking about that. It's a piece of the puzzle. Apple's daily chart, by the way, check this out. Big wick, big lower wick. Let me get rid of these lines. Big lower wick here. If we can finish stronger today, this could be a really, honestly, a bullish looking setup, bullish looking candle. Microsoft, not a huge wick. Nvidia, kind of a doji looking candle. AMD is the weakest one there. Meta, Amazon, Google's been strong. Google's pretty strong. It's up towards those highs. Keep that in mind. XLF. The banks. How the banks looking? They're just chilling. They're still technically holding this area around $30 on XLF. The financial ETF. It's still holding that level, which is a support zone over this past 12 months. XLI got hit the past 2 days pretty hard. Look at that. Honestly, it was a really good break and retest. So it broke down underneath this trend line that was trending up. Okay. Retested it and rejected. So that worked really, really nice. That would have been a really interesting short if you had grabbed it around 101.50 or 102. Killer. SoFi. It's holding up. It's got a decent little wick today, but it's higher lows, man. It's not bad. As long as $5 holds. SoFi did fill the gap on this gap down back in March. Filled that late last week into the early this week. And now it's trying to hold 560 or 550. Holds that would be decent because I would continue the higher low trend here in the shorter time frame to the overall, I guess, 425 low, 510 being the higher low from March. So 510 goes, that's concerning, but as long as that holds, SoFi doesn't look too bad. I want to go back to that AI. So like we were talking about on the 1 hour chart for AI, we were saying like, hey, it looks horrible, right? But it is in a spot that we've seen some bounce action and some dip buyers come in. So wouldn't be surprised for a bounce. Now you are getting that bounce. My thought would be maybe this has a day or so bounce in it. And I'll see what it wants to do. But I think there could be a clean trade on the downside from 20 down to like 18. It's just timing that is the tricky part. And does it happen? Does it break 20? So right now it's at 21. It's holding 20 for now. Buy XLF. If you believe that this banking crisis is done and that these bank stocks are going to have or fine, sure. I guess then that would be the dip buy. We talked about that one I think last week or weeks past. That if it ends up being that these are simply put just like this scare kind of brushes right off, and we go right kind of back up, the market stays fine or generally holds up, there could be a nice rebound in banks because it did bring on some fear. The problem is it's just the beginning of of bigger problems to come. However, if you look at this, what do you see? That, my friends, technically if it holds $30 or so, inverse head and shoulders. So it's like AI's bottom 2050. Yeah. If that area holds, then that's the spot. Under that would be bad on AI. My thought would be best short stock. I mean, you can take your pick or take your guess. But if I had to pick one from a non micro cap or small cap, that's like a piece of shit essentially. It could be this. The reason why is that you've got a lot of people who, played into multiple times the momentum. And is it the end of AI? No, absolutely not. But at a minimum, it could be a painful situation or a painful trade for this to kind of flutter back down into the teens. And so that could then start providing better opportunities. I have no idea about the fundamentals here. No idea. Just talking charts, no clue. But back down to 18 is a spot that I would not be interested in shorting this thing under 18. But from 20 to 18, it's a spot that I'd be interested if we break down. Why? Because you have an area that was previously on how many weeks in a row now, or how many weeks in general? Like, it's been every week since February, or since mid-February, that AI has bounced off of 20.50 or $20 roughly, call it $20. So once it breaks that, people are going to freak out. They're going to see some breakdown. They're going to see some selling pressure. And so that could provide a nice downside. Wasn't too active today to fix my shower. It was pissing me off. All good, man. That's all. It's all, and then that's why I think that. Oh, I didn't realize the market's about to close. That's why I think doing some more lives at night. So I want to do one like Tuesday to Thursday, like somewhere in there at night. One of those nights. Going forward, would be good because I think we can get a lot more people in the chats and stuff. Because on Sundays we generally have a lot more action in the chat. Makes sense. People are home, right? Resetting for the week. And during the week it's kind of hard. During the day it's hard too. People got work and school and all that stuff. Other responsibilities. I get it. But SPY didn't look bad and kind of got above VWAP and kind of pushed into the close. Ended up being a kind of a choppy day. It's barely down. It's down, but not that much. So down about 0.25% on SPY to finish off the day. Tomorrow should be interesting. Tomorrow's the last day of this week in terms of trading. Friday, the market's closed. Good Friday. It's a good day to, I don't know, maybe do some research. Maybe look at your positions, look at your trades, look at that stuff. Like, see what you've been doing wrong, what you've been doing right. If you got some extra time instead of looking at the market, whether you're doing that during the day or they're doing it at night, it's not a bad time, in the morning, right? Sometimes I find that when I am at the desk and I'm not doing other work, and I don't necessarily have a deadline for certain things that I got to get done or whatever, it's very easy just to kind of stare at stuff, to flip back and forth between these charts and that charts, stare at things and get kind of caught up in whatever's happening, even though like I might not do anything, right, the entire day in terms of make a position or open a position or close it. But it's easy to get caught up in that. So sometimes those days are nice. Watch your videos. Did some scalps, made a bit profit. Nice. If you ain't trading, better be charting. That's funny. That's true. But there's a lot of stuff to do, whether that's researching, I don't know, other stocks or other ETFs that you might want to buy or, build out in a long-term position. The other thing is, I think too, is I think a lot of times, like we tend to do too much, even on like a long-term portfolio, we tend to like micromanage it in some way. And it ends up hurting us more than we think. Like you think, oh, I'm just going to hold these positions long-term. Next thing you know, you're jumping over here, you're adding hedges and you're selling covered calls over here. Like, you're selling them close to the money and they get taken out. Then you're like, oh shit, my long-term position has now gotten taken out. I got to rebuy. And like, sometimes you make it more complicated than it needs to be, and just like leave it alone, especially on the longer term. Take a break. Yeah. It's a good idea to take a break. And good idea to take a break and get outside or do whatever. Here, it's supposed to be kind of shitty. It's been super nice, super warm, but it's going to be like raining the next like 2 days and be like 55 and rain. Like, that's great. So, but I guess, more time to catch up on work stuff and other stuff that I got to get done anyway. So that's why I went and got my run in today while it was still nice out. Even though it's cloudy, but with that said, guys, I'm going to wrap things up. Maybe we'll do a... Stay tuned for a live. It could be tonight, could be tomorrow night. I think that's what we want to do. do an extra one during the week, during the nights, even if it's 30 minutes, just for fun, because I think that we get some more talk and some more action and some more insight in there. So we'll see. We will see. Risa, that's where I've been, taking a break from micromanaging. It's kind of, you always look back and you're like, if I just didn't do these. And sometimes you look back too and say, I did all this stuff. I spent so much time doing all these things. And did it net me a better or worse return than just holding what I already had planned to hold? And you look back and go, maybe not. I wasted all these hours. Now, okay, I don't think the hours are wasted. It's still good learning, right? But maybe, as you kind of progress and as you get more experience, you're like, you know what? Maybe there's things I could do that are more productive for my time than micromanaging my account, right? That maybe is a long-term account. So I don't know, but we'll see. We'll see. Thanks so much for watching, guys. Thumbs up on the way out. I will see you in the next one. Peace. Have a great rest of your day.